Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
In a finite amount of time, what are the specific areas of fundamental analysis that a discerning investor should focus on?
Sure. So Marcellus' investment philosophy revolves around identifying companies with strong fundamentals based on three C's, right? As we like to call it. These three C's are: one, credible accounting; two, competitive advantage; and three, capital allocation.
How can investors avail of these benefits of long-term fundamental compounding, right? How exactly does this translate into superior returns for investors?
Identify good companies based on these three pillars which we discussed, and to avoid well destroyers.
Right. So just to put it in simple terms, if you're buying a clean company, promoter is a clean guy, basis forensic accounting, you identify clean companies. Hi there, my name is Saurabh Mukherjea and it's my privilege to welcome you to Guru Mantra with Saurabh. This is the 6th episode, and in this episode we will focus on the importance of company-specific fundamentals in driving long-term equity returns. My colleague Krishnan from Marcellus Investment joins me. Krishnan runs the investment advisory vertical of Marcellus. Our focus here today will be on how is it that top quality companies, well-run companies, compound your wealth in over long periods of time. What is it that allows them to create wealth in India? So the challenge that we see in India, right? The challenge that we see most people in the Indian stock market go about is they're not able to benefit from compounding because they're not able to figure out which is a high quality company, which is a low quality company, right? And they then get lost in this whole business of tips and fashions and whatever is the hot stock of the day, which, as we discussed in the preceding episode, doesn't take you very, very far, right? What sort of companies should investors look for? What is a high quality company? How do you decide? How do you identify a high quality company, Krishna?
Sure. So again, if you think about the stock prices, many people, again, like we discussed, right? Again, they are following news or so many other things. But actually, what drives stock prices is fundamentals, right? And these fundamentals are, again, the fundamentals of the company.
Fundamentals ka matlab kya hua? What does it mean?
So it's the profitability of the company, for example, right? Or the management quality of the company, right? The capital allocation decisions taken by the company, and the business strength of the company.
Capital allocation, can you just go, what does capital allocation mean?
So, for example, what kind of projects the company invests in, right? How does the company allocate capital, to different competing projects, within, the different options that it has, right? How does it, for example, look for growth opportunities, right? How does it invest, how much does it invest in growth opportunities, right? Or, how does a company identify inorganic growth opportunities?
Nice. So it's very similar to, if you were to look at it in the context of a cricketer, the fundamentals for a cricketer would be, how good is his technique?
Exactly.
How patient is he? How does he cope with pressure? What are his fitness levels, right? That's what you mean by the fundamentals of a company. Similarly, when we discuss how good is a company, right? You mentioned capital allocation. In the cricketing sense, it would be which balls does a cricketer go to hit out of the park?
Yes.
Which balls does he defend? Which balls does he leave alone? Similarly, when a promoter has capital in his hand, the promoter of the company, how does he allocate the capital? Right?
Correct.
So that's very clear. Now let's get into some specifics. When we talk about fundamentals, right? What are the 3 or 4 areas, right? Because people have only finite amount of time. The listeners to this podcast have many other things to do. In a finite amount of time, what are the specific areas of fundamental analysis that a discerning investor should focus on?
Sure. So Marcellus' investment philosophy revolves around identifying companies with strong fundamentals based on three C's, right? As we like to call it. These three C's are: one, credible accounting; two, competitive advantage; and three, capital allocation, right? And again, just focusing on these three aspects can allow investors to generate healthy returns without taking.
So let's take them one by one. Let's start with credible accounting. थोड़ा सा विस्तार में समझाओगे credible accounting?
So this the first pillar, credible accounting, uses a set of forensic accounting ratios, right? And essentially to identify companies, which are present not presenting their their accounting in a fair manner, right, or their financials in a fair manner. Essentially, you can think about these companies as fraudulent companies which are misrepresenting their accounts, or companies essentially which are
the accounts are
corporate governance.
The accounts are not giving a true and fair picture
of the
company's
company,
reality.
right?
Right. So I know we'll talk about this in further detail in the next podcast, but एक छोटा सा example देता हूँ. If you look at our book Diamonds in the Dust, we've given several examples of companies whose books had serious accounting issues. Most of these companies subsequently unraveled. And in Diamonds in the Dust, one example we have given is a company called DHFL, Diwan Housing Finance Limited. This was a home loan provider, and we've highlighted there how through 2014, 15, 16, 17, we kept seeing accounting issues, specifically the bad loans ratio, the NPA ratio, non-performing assets ratio, was simply too low to be believable in Diwan Housing Finance. And subsequently in 2018, as things turned out, these issues started coming to the fore, and then obviously the stock price suffered an enormous drawdown, I think 90% drawdown, because the company's actual NPAs, actual non-performing assets, was higher than what was being shown in the annual report. Let's move to the next area. After credible accounting, what's the next area of fundamental analysis?
So, competitive advantage is essentially searching for companies that possess strong and durable pricing power, right? Which allows them to be leaders in the markets and consistently, earn returns which are higher than the cost of capital, right? Essentially, this is, if a company has, has this competitive advantage, essentially we say that, this company has wide moats, and, these companies have very low revenue and profitability risk. Essentially, they have, the competitive advantage to fend off incoming competition.
So let's just take a quick example here. If you look at the jewelry industry in India, remember Indians are the world's largest buyers of jewelry. So if you look at the jewelry industry in India, the market leader is Titan, right? So Titan has been in this business for the best part of 30 years, and because of the faith their clients have in Titan is able to charge a hefty premium. So the making charges on Titan jewelry, you'll notice, the making charges will be typically 1/3 higher than what any other jeweler is able to charge, right? So the result of Titan being able to charge higher prices is Titan's return on capital. Return on capital is simply profits divided by business में कितना पैसा लगाया गया है. Titan's return on capital is around 35%. Most other jewelers in India are in the vicinity of 15 to 25%, right? So Titan's able to charge customers higher prices. That results in superior profitability for Titan. That's what Krishnan is referring to as competitive advantage. आगे बढ़ते हैं Krishnan. Next area of competitive advantage. Next area of fundamental analysis.
Yeah. So again, that's a great example, Saurabh. But the third pillar is capital allocation. It's about finding companies that make the best use of their excess return, right, over the cost of capital. Essentially is the free cash flows, right, how they're deploying, like I said, right, how they're taking those free cash flows which they're generating and how they're deploying it to grow their business as well as to deepen the competitive advantage.
Right. So Titan के example से ही capital allocation समझाते हैं आपको. So around till 2003, Titan was primarily making all its profits from selling watches, right? Even today, Titan has 60% share of the watch market in India. Then from 2003 onwards, they were able to start growing their jewelry business. By 2013, the bulk of their profits are now coming from Tanishq. Tanishq is their jewelry business. Today, around 80% of their profits come from Tanishq. Then from around 2014-15 onwards, they started allocating these excess returns. Remember, Titan makes 35% ROC, so they're making returns well in excess of their cost of capital, right? So they started allocating extra capital to their online jewelry business. They acquired a firm called Carrot Lane around 2017, right? And today they're not just market leaders in watches, not just market leaders in conventional jewelry retailing, they're also the leader in online jewelry retailing. And over the last 4 years, you would have seen they've also now started allocating capital to Taniera, which is their sarees business. They have roughly 60 stores where they sell high-end hand-woven sarees, right? So this is an example of capital allocation. A business generates extra profits by charging premium prices. Then the promoter, the CEO, takes that extra profit and keeps adding new business lines, thus creating more and more wealth for the shareholders. So Krishnan, we've understood, right, the basic concepts around fundamental analysis, accounting, competitive advantage, capital allocation. How can investors avail of these benefits of long-term fundamental compounding, right? How exactly does this translate into superior returns for investors?
Sure. So, again, if you are equity investors, if you have a long-term, investment horizon, really the only risk you should be concerned about is, the risk of permanent loss of capital, right? Because remember, your horizon ideally should be north of 10 years. This is what we have, discussed till now. So, essentially, what really matters is to identify good companies based on these three pillars which we discussed, and to avoid well destroyers.
Right. So just to put it in simple terms, if you're buying a clean company, promoter is a clean guy, basis forensic accounting, you identify clean companies. Secondly, the company is very profitable. Why is it profitable? Because competitive advantages are very strong. Company साफ सुथरी है, profitable है, and thirdly, the profits are being allocated well. This is the capital allocation layer. Krishna is saying अगर ये तीन चीज़ों का मिश्रण है, साफ सुथरे अकाउंट्स हैं, कैपिटल एलोकेशन अच्छी है, कॉम्पिटिटिव एडवांटेज है, एंड यू आर लेटिंग टाइम बी योर फेवर, टाइम रन इन योर फेवर, कम से कम 5 साल का होराइजन लेके आप पैसा बना रहे हो, कम से कम 5 साल का होराइजन लेके आप निवेश कर रहे हो, इट इज़ वेरी डिफिकल्ट फॉर यू टू लूज मनी इफ यू फॉलो दिस फिलोसफी, राइट? दिस इज द मेन बेनिफिट of high quality fundamental investing over long periods of time. The probability of wealth destruction becomes low, the probability of wealth creation becomes very high, the risk reward swings in your favor, right? सचिन तेंदुलकर, राहुल द्रविड़ की तरह आपका टेस्ट एवरेज 55 की तरफ जाने लगता है, आपकी करियर, आपकी पोर्टफोलियो ऊपर जाने लगती है, right? Krishan, any other thoughts on how investors can focus on high quality stocks but yet get them at wajib dam, at undervalued prices?
Sure. So again, buying quality businesses by emphasizing the fundamentals, like what you have discussed, again at a reasonable price, right? And if you do this, buying good, quality businesses, again based on these three pillars, and then also make sure you're taking valuation into account, and you do this in a disciplined way. Right, you don't fall prey to emotions. You're not looking at the news development, etc. You're not getting swayed by what's going on in the rest of the market. You're just looking at buying good companies. You're staying invested, and you're doing it in the systematic way. And you're looking at valuations and fundamentals. This is the the most powerful way to compound your wealth while minimizing risk.
So if someone doesn't have the time to do it themselves, is there something that you can do to help them?
Yeah, so again, like I said, I mean, we have an advisory offering called MeritorQ, which again, we are looking at these three pillars again, the credible accounting, competitive advantage, as well as the capital allocation, along with valuation, when creating the portfolio.
So folks, there you have it. These are the mool siddhant. These are the core principles of successful long-term investing. Clean companies, good capital allocation, dominant competitive advantages, all of that in the context of reasonable valuations, and you have the basis for wealth creation in the long run. That's the core message from the 6th episode of Guru Mantra with Saurabh. In the next episode, we will focus on the dark side of equity investing, all the nasty stuff which can ruin your wealth, ruin your portfolio. But thank you so much for joining us in this 6th episode.